All right, let's move on. I want to take a quick break from the honing in on FX because I wrote about this yesterday. We're going to look at the copper gold ratio, and this obviously plays into FX. We're going to look at copper, gold, and this is a weekly chart of copper divided by gold, okay? You see this trend line that we've hit? We hit this basically back on late February, and we were starting to roll over a bit, right? So this is the copper divided by gold ratio. You know, just think, it doesn't matter what it is, it could be anything. But if you saw this chart, and have we broken out yet? No, we've kind of, you know, come up here and failed, and we're pulling back. It would seem a good spot for us to pull back some, right? That's my working assumption right now, is that we're going to pull back a bit, and, you know, eventually we might be looking for support, you know, where you'd expect to see some, you know, support on a chart, which would be an important pivot, something like this. I'll just look at the chart. You can see here you've got, you know, look at these levels here, right? This is where the ratio might be for support. But as of right now, we are looking for a pullback in this level because we're at resistance, right? What does this mean? Well, as you know, copper to gold is indicative of inflationary trends. So it basically looks like interest rates. And when I look at rates, I look at the long end of the curve because that is the one that is most sensitive to inflationary pressures. So in orange here, I've got the 30-year yield, and in black, we have our copper gold ratio. Pretty much the same thing, right? So again, when this is going down, it's going to be meaning that you are in a deflationary environment from a market standpoint. When it's going up, in an inflationary environment, right? If you pay attention to financial news or markets or whatever at all over the last year, you've known that, you know, they've been talking about this inflation trade, right? That's what this is, up, okay? Inflation trade. What does that mean? Well, it means higher commodities. It means a lower dollar. Not every commodity, of course, but things like oil, copper, of course. Gold has not gone higher, but, you know, also higher yen crosses. Well, we're starting to see that reverse a bit, right? And again, since we're at resistance, I would not be surprised if we did continue to see that. Obviously, the dollar has been rallying since January, right? So that has been occurring. Commodity currencies are just kind of starting to roll over a bit. We might have a little more left there. Yen crosses have yet to do anything. So that is where I kind of want to focus my attention a bit. And I will show you some, you know, we looked at Aussie yen last week, but we're going to look at pound yen here in a bit, which is coming into a massive, massive level. So, you know, from a macro standpoint, it's important to understand the dynamics at play here, you know, and what this means, right? The inflationary, deflationary cycles that, you know, are oscillating, you know, in markets. And it's not just, you know, pertaining to FX, but obviously sectors, emerging markets, you know, tend to do well in inflationary periods, et cetera, et cetera. So I did want to bring that to your attention as well. So the two legs of that, right? Copper divided by gold. So this is the copper chart. Again, huge resistance that we came into. This is a shorter term chart. You can see that we are kind of sitting on a massive shelf. So keep an eye on copper, because if this breaks to the downside, which eventually I do think will happen, simply because we have come from this massive long-term, you know, resistance line, former support line, right? that breaks, then you're going to get a waterfall, and you might get a massive drop in things like Aussie yen, etc. So probably, you know, the renminbi. Here's gold. Gold, on the other hand, looks pretty promising down here. So channel, we nailed that channel support perfectly, right? Kind of came into an important price, horizontal price shelf here. Broke above the 2021 trend line here in blue. Let's go to a near-term chart. Next week, I'd be looking to be a buyer of gold on a pullback down towards, say, 1712. We could pull back, you know, basically from like 1730 or so, which we're at now. That is, you can see this parallel here. You see that was former support, resistance. Watch for resistance again. A little pullback, 1712. Look to buy it. Take it up to 1780, 1785 or so. So we've got a good trade idea there. So those are your two legs of that cross, right? And it is interesting to note that, you know, gold does look near-term bullish, and copper, if it breaks, has some downside potential. Okay. So there is a little macro lesson on copper gold.